Okay, good morning, everybody, or afternoon, evening, wherever you're from. I want to welcome you to the first mini-series event of Market Vision 2020. I'm Tom Boley, Chief Market Strategist of EarningsBeats.com, and we are extremely proud and very excited to sponsor our first online conference. Today's event will be the first of several online webinars leading right up to the main event on January 4th, 2020. And it is being recorded for your review later if you need to leave for any reason. The whole idea of these mini events is to let everyone get to know our amazing lineup of speakers. That concept started this morning in our Market Vision 2020 newsletter, where we provided a speaker profile on Mary Ellen McGonagle, who is the president of MEM Research. If you read that newsletter article, there was a brief professional bio on Mary Ellen and also some fun facts about Mary Ellen that you probably didn't know. I can tell you, I certainly did not know these facts. It was a lot of fun reading about them. So without further ado, I'd like to take this opportunity to introduce Mary Ellen McGonagle. Good morning, Mary Ellen. How's everything on the West Coast?
Hi, Tom. I have to say it's a little chilly out here, a little nippy. I think we're into the 60s.
Oh my gosh, really? Is that how we're going to start this off? You're gonna gloat about the Southern California weather?
No, it's actually cold.
So where are you? Are you down like near LA?
Yeah, I'm in Los Angeles, but it's an area called the San Fernando Valley, and I'm up in the north part.
Okay.
Yeah, a house we're built into a hill, so I can look out over the city.
Okay. Now, is that good being out there built into a hill? Because doesn't all the ground move out there occasionally?
It does. No, we're retrofitted. We're firmly in place.
All right, that sounds good. Well, we are really excited to have you here today. And I was reading through the newsletter, of course, when you sent some information over, some of the fun facts, and we're going to do this with all the speakers. I thought it was kind of interesting. But you mentioned that you're a big skier.
Oh yeah.
Wow.
Yes.
And you have skied every major mountain in the U.S. Like, is that the truth?
And the minor ones. Yes, I can rattle them off, but yes, every state up and down, most of the ones in Colorado, Utah, New Mexico, Wyoming.
Okay.
Yeah.
So you've heard of Vail then?
Oh, I've been there
Colorado.
more than once. Many times I've been there. Yeah.
All right. So is this something where you plan like trips? Do you have friends that go on these ski trips, or how? I mean,
yeah.
Oh.
Started out in Killington, outside of Manhattan, where we all had a ski house. There were about, I think, 15 of us.
Oh, wow.
And half from Boston, half from New York City. And that went on for years. We would ski every weekend. And then from there, we would say, well, heck, let's ski elsewhere. And then friends. We went over to Europe a bunch, and just such a great sport. It's so challenging and refreshing. And then, of course, the après-ski is an integral part.
Yeah. Well, I can only speak, in terms of ski slopes. The only ski slopes I've ever been down are the ones on the charts, the stock. When I ride a stock down, that's my ski slope. I've never been snow skiing.
Oh, my goodness. I recommend it.
Well, I did. Have you ever water skied?
Yes. Yeah, only once though. I did not conquer quite as well. Are you a water skier?
No, I went water skiing once on the Chesapeake Bay in Maryland, and they had to close the bay for low water from everything I swallowed. So they banned me. They banned me from the Chesapeake Bay. I can't go back skiing anymore. But no, I'm not a skier. I'm a golfer. But this isn't my week to talk about my stuff. So, how about you mentioned that you're a twin and that you have twins.
No, I am a twin, and I have twin brothers as well. So, we were quite the anomaly growing up as a family. But my twin sister she lives down south, and she's very much into the art world. She's an artist and doing her thing there.
Well, you're an artist too with your charts. I've seen you annotate your charts. You got a little artistry in you.
You are funny, Tom, I will say.
All right. So are your twin brothers, are they older or younger?
Yeah, they're older. One was living in Macau for quite some time. He headed up the casino operations for Las Vegas Sands, and the other was the principal of a big public high school in Philadelphia.
Oh,
So
wow.
they were a little different.
And that's where you grew up, you said, right? You grew up in Philly?
I did grew up in Philly.
Okay.
Yeah,
Wow.
yeah.
All right. Well, I think I'm going to go ahead and let you get this thing going. Do again want to welcome everybody in. This is our first mini series event. If you're just joining us, I've got Mary Ellen McGonagle here. She is president of MEM Research, and she is going to be giving you talk about her strategies and her trading style to give you a little bit of I don't know, just a little bit of information so that if you do join us for Market Vision 2020 on January 4th, Saturday, January 4th, 2020, you will have a little bit more background on Mary Ellen. And that's the whole idea with this mini series, is just to give everybody a little bit more professional and personal background on all of our speakers. So with that, Mary Ellen, I'm going to let you take it away. Have a great talk, and if I come up with any questions, and actually that's a good thing to bring up here, as I go through, if I see something, I'll probably just stop you and ask you to clarify a couple things. But for any of you all out there that have questions, it's not a question and answer session. I just want Mary Ellen to go ahead and share her story and what it is she'd like to tell you today. But if you have individual questions and you type those in, and maybe, I don't know, Erin, my daughter Erin is also here. Is there any particular information we need to give anybody as far as asking a question, a Q&A? I don't know if there's something they just click on and type in.
Yeah, they should just have a Q&A option at the bottom of their screen where they can submit their questions.
Okay, awesome. So find that Q&A down there. If you have any questions whatsoever for Mary Ellen, type those in. Mary Ellen has said that she will respond to everyone by email after the show. So if you see something, just rather than say, you pointed out that 50-day or something, try to be more specific. So if you're looking at a chart and Mary Ellen's pulled up Google and has a question, just say on that Google chart that you shared with us, and then ask your question or whatever. We'll make sure we get those questions over to Mary Ellen, and she will respond to you directly. So should be a great event. I hope it's a great learning experience for everybody. And so with that, Mary Ellen, I'm going to let you take it away.
Sounds great. Okay, well, hello everybody. What I'm going to be reviewing today, and it was outlined, is characteristics of a stock poised to move higher. And for those of you that did not read the bio, I did spend 15 years with William O'Neill and Company out here in Los Angeles. And for those of you not familiar, Bill O'Neill is the founder of Investors Business Daily. The purpose of that publication is to put investors, both professional as well as self-directed, in front of these winning stocks. And during my tenure and my time there at O'Neill, I did just the same. I was working with professional portfolio managers around the world. And as such, the goal was not only to teach them the O'Neill methodology, but also help them with their stock selection. Oftentimes, these professional managers would have watch lists where they had gone, they did the work, they know the fundamentals, they're just waiting for it to get more technically sound. So with that watch list in hand, I would advise them if the stock turned technically positive, but also did a lot of work with them on the broader markets as well. So I thought that would serve as a good backdrop, because any of you who may have read Bill O'Neill's book, he has about at least 8 different editions out, but it outlines entirely this proven system on just how you can uncover these big stocks that go on for either triple digit, some cases thousands of percent higher. So a lot of my work is centered around that proven methodology. So we're going to get into that. So I'm going to share with you some examples, but also some of those characteristics to really help zoom in and put a nice system in place for you that you can potentially either incorporate with your own existing system, or perhaps you can adopt some of the principles for this system. So I ask up here, what causes a stock to move higher? And there are actual characteristics. There are many. I'm going to be covering certainly the most important or relevant, and one of them is heavy demand that's led by institutions, and that's going to be viable, or you can actually view that by taking a look at the volume, because when you're looking at a price chart, about 80% of that volume is going to be institutions, and these institutions, it's viewed as smart money. A lot of the companies I worked with were well-known mutual fund firms and otherwise, and they have teams of analysts. They have their feet on the ground. They're out there meeting with management. They're talking to the competition. So when these institutions come in and you can see their volume on a chart, it is well worth paying attention to. But one of the strongest drivers as far as a stock's accelerated move higher is going to be strong earnings and sales. And it's going to be both their current reported earnings as well as estimated going out forward, and then past earnings. So I know with Tom's work, you've seen a lot in the way of EarningsBeat and the relevance there. And it is something that I concur with wholeheartedly, that is going to be that primary driver. We're going to share some examples that will really highlight this. And then oftentimes these companies have, they're producing or providing, distributing what are called innovative products that are in a growth area of the markets. And of course, but naturally this production of these products is going to help drive their strong earnings and sales. So it is a component. And for instance, cloud computing, the Internet of Things, I'll say there's a lot of innovation going on in healthcare with medical products. So that is going to be another component as far as the characteristics of the company, of a stock that is going to move higher and by a lot. And I talked about demand driven. So in this instance, what I'm referencing here is that the company is providing a product that is being driven, demand is being driven by the market. So as a case in point, an increase in military spending, and this is an area, defense spending, it's multi-year, because as companies, as innovation continues, we're seeing a lot in the way of newer ways that you can create different products for cyber security, for instance, and countries are always going to want to be on that cutting edge. So this is an example of an area where you will see an increase in market-driven demand. So let's take a look at one of the examples, and each of the examples that I am sharing with you today, these charts are from this year, but a little bit earlier in the year. But each of these names are stocks that at some point in time were a part of, I'm with the president of MEM Investment Research, and as such I put out a bi-weekly newsletter, MEM Edge report, and each of these stocks were highlighted, and I'm pointing out to you when the MEM Edge report added these stocks as a suggested holdings, and I'm going to go through and explain various reasons why these stocks were chosen. So here's the first example. This is RingCentral RNG is the ticker symbol, and we are looking in this case at a weekly price chart. I wanted to give a little bit more in the way of time here. So what I'm highlighting here is taking us back to the end of 2016 into the beginning of 2017. And in this case, the stock broke out of what is called a base. That's a saucer type formation. Stock attempts to hit a new high, pulls back, and then eventually does come above that prior high, and it breaks out on volume. So that is, in fact, when we did put this stock on, we will stay with the stock if it continues with its uptrend. But during this lengthy period here, the stock did advance 375% out of this breakout phase. Now, I do have these arrows that are pointed throughout these weekly charts. And the reason there is because each of these high volume uptrends on these given weeks were driven by the release of this company's earnings report. So I also use other indicators, in this case the RSI and the MACD. These are momentum type indicators, relative strength indicators, the RSI. MACD is the moving average, convergence, divergence. And I need to see this, both of these, in uptrends ideally, but above their net neutral to indicate that the stock's uptrend is still in place. So let's take this just a step further. This is that very same chart, RingCentral. And when we first picked up on it, it was definitely a smaller cap name, but it did at this point in time release earnings that were 200% greater than that prior quarter. So these numbers are presenting you with their year-over-year earnings growth. So simply you can see how these strong earnings can in fact be a big driver and a reason for these stocks to trend upward. Let's go ahead and talk about some of the other characteristics. Pardon me, I have a little frog in my throat, but pardon me. But what I did want to point out here, I talked about how companies are presenting and releasing products that are in high demand. Another way and another area and a reason for a stock to excel and perform better than the broader markets is the company is, in this case, they are profiting from what is called a disruption. And in this case, it's a disruption in retail. I have here a weekly chart of Shopify, S-H-O-P. And Shopify, for those of you not familiar, they provide a software platform for individuals and now even bigger companies to provide their products directly online. There's no middleman, no retail. And that at the time was quite disruptive. When I talked about O'Neill's system, a lot of it had to do with disruption in many different areas. McDonald's was a big winner in the 60s. They disrupted the way food was being delivered. They came out with fast food as a new concept. So in this case, we're talking about software. And what I wanted to point out here are a couple of characteristics that would point you toward a stock that was poised to outperform. So again, taking us back to the end of 2016, SHOP on this weekly chart was consolidating. This is a flat base. The former base I showed you was a saucer type one. Flat one is a back and fill, and we can see for about 3 months here, it did just that until it broke above that consolidation. And in this case, again, it was earnings driven that got this particular advance and uptrend on the way. So we can see this advance during this entire period. This RSI on the weekly chart remained in this upward positive stance. It was above this net neutral zero, and I'm pointing that out because oftentimes these stocks, they're not just going to parabolically advance to no end. They will have pullbacks. In this case, the stock did break briefly below that 50-day. However, on the weekly, your other indicators were still positive. Your moving average, convergence, divergence, we had a negative crossover, but it did still stay above that net neutral zero. So we had a period here for about 8 months where the stock did not advance. It was in a go nowhere environment. And institutions, they will stay with the stock. They're in it for the longer term. But for those of you that are a bit shorter term in your trading, you may, during this period, put your money to work elsewhere, but keep the stock on your watch list. It was a very big grower. A lot of the growth dynamics were still in place. They just weren't quite as dynamic. And over here, I'm just pointing out the fact that after this pullback period, when you are looking for a downtrend reversal, you will want to see this price advance back above these simple moving averages. The red is the 50-day, the blue is the 200. And I talked about volume as a key characteristic. So we did have that break back above on volume in line with a MACD that turned positive. So then we do have another leg up, and that's very, very common among these winning stocks. They will have multiple periods of uptrending where they will advance, perhaps take a break, and then have yet another leg up. So a lot of these winners, for me with my MEM Edge report list, I will have stocks come on. As a matter of fact, this year, again, it was defense-related stocks, Lockheed Martin, HEICO, and so forth, but they did fall out of favor in July, and they are coming back on. So they are growth names, so I will put them back on as they begin their new uptrend. So here again, I'm talking to you, this is taking further that downtrend reversal, and the advance here did begin with a very sharp, strong earnings report. The stock did reverse this downtrend before that, but that earnings was the driver to allow this stock to advance and have yet another leg up. So here we are. Yeah, I did talk about high demand for defense-related products. So this is HEI, another name that was from the MEM Edge report. And what I wanted to point out to you here is the stock did have a very nice advance out of that 2018 bear market. So we were able to put that on our list, but you'll see these pops, these gaps up, and oftentimes, and in this case, it is again going to be earnings related. So here is their earnings release, their Q2 earnings release here. The stock gaps up. Take a look at that huge volume. That's telling you that institutions want in, and oftentimes with these institutions, we're now looking at a daily price chart. It will take them at least several days to assume and actually get a position in place. So this first gap up, oftentimes when you see it on this huge volume, and we are seeing a lot of it this earnings season, where the stock will continue to advance as those institutions accumulate the stock and create those positions. From there, it will oftentimes perhaps just be in an upwardly trending kind of a sideways move. We stay with the stock because you can see that even though it appears to be going sideways, you're still making progress, and that's certainly relative to the broader markets. These summer months were very tough period for the markets, so that is, again, that demand driven. Let's talk about...
Mary Ellen.
Oh, sure.
I got a couple questions for you. And
Sure.
Actually, before I do that, we've had a number of people come in since you started. I just wanted to welcome everybody who's joined us here for this mini-series event. Mary Ellen McGonagle is the president of the MEM Research, and she's going through her style and her strategies for uncovering some of these companies before they make these big moves. But a couple of questions I had. I know you showed, and I've got a little bit of insider information because Mary Ellen and I co-hosted on Market Watchers Live, so I know a little bit about the way she looks at the stocks. But you did look at weekly charts earlier, and now you're looking at a daily chart. On this daily chart, let's say you're watching HEI, you know it's in that basing period in May, and then it gets the news in at the end of May where it has that big gap up on the heavy volume. What's the strategy, or what kind of strategy do you use of getting in? Do you try to get in over time, slowly, or do you just say, hey, we got this breakout, let's just jump in here? What's your strategy when you see something like that that's kind of a game changer on the chart?
Yeah, that's actually a great question because, as I mentioned, and you noted, I'm sure, we've seen a ton of gaps up this earnings season. Really, from the many years I've been studying the markets, I have not seen quite as many as this quarter. So what I do here is twofold. One is I want to pay attention to a couple of the characteristics on that breakout, on that gap up actually. And number one, of course, is going to be this huge volume. And if you just look over the landscape, you'll see that this volume is parabolic compared to historical levels. And from there, I want to see where the stock price closes. Does it close in the very upper portion of its trading range on the day? And in fact, that was the case. I can show you examples for those of you that maybe are at your computer. You can look at LOW and some of the other names that gapped up and then fizzled. Those types of stocks aren't going to have that elevated chance of continuing to advance without pulling back. A similar name to this in currently would be Disney. That gap up recently was more news related on their subscribership, but that was a stock that closed in the upper reaches of its trading range on huge volume. Again, these are institutions, they want in. So oftentimes when I see that type of action, I would advise to get into the stock quickly, if you may. I mean, not in kind of a panic quickly, but more from a sense that the stock does have legs. It is in a phase where it very well likely will just continue to advance. Again, other stocks that gap up in the volume might be a bit more muted, maybe more similar to this type of high volume, and the stock closes kind of in the middle range. That type of gap up, I will wait and potentially wait for a pullback to that 10-day simple moving average. So those are the dynamics that would drive my decision making. Tom, I don't. Yeah.
Yeah. I actually look at the market pretty similar when you get these big gap ups like this. And the thing you have to understand too is that when you get news out that's a lot better than what the market thought, there's this revaluing of the company that takes place. I mean, we just look at the stock price and say, oh, it's gone up 10%. But there's actually, fundamentally, being a CPA, these companies really should be valued based on the present value of their future cash flows. And one of the things that I've argued, because I am extremely bullish the market right now heading into next year, and one of the reasons is that these companies, and I think that's why we've seen these software companies that have just exploded to the upside, is that their earnings and their cash flows are expanding very rapidly. So when you get this new news and then you take and adjust the future based on this news for the increasing cash flows, and then you discount it back using market rates of interest, which are the lowest we've seen in 50 years, or certainly near 50-year lows, that's what's driving a lot of these valuations. And I hear people say, well, the PE ratio is 110. How can I jump in? Well, again, a lot of times you have to realize that if this growth continues going forward, you're discounting it back using a very, very low interest rate, which increases valuations. So I think all of that together, I agree 100%. It's not just the fact that it gaps up, but I think a lot of times you want to see that institutional demand that creates that continuing push to the upside. Mm-hmm. And the only other thing I mentioned is that if you understand the way the market works, when you get these gap ups or gap downs, market makers are on the other side of these trades. They're the ones that provide liquidity, and market makers generally make money. So when you get a gap up like Mary Ellen was showing here on HEI, you've got to understand that at the open, the market makers are on the other side. They're shorting, and that's why most gaps fill. The ones that don't, you need to really pay attention to. So I completely agree with your assessment there.
Yeah. And then there's one other item you mentioned, PE, and that's a very good observation. I will tell you a quote that Bill O'Neill very often would cite. And when there were a few times I would go with him to meet with some of the bigger institutions, and when that came up, his comments talked about demand. And in this essence, he was a big baseball fan. And so when you look at sports figures that are now being paid hundreds of millions of dollars to play baseball, he would equate that to a PE in the essence that they are high performers and there is a demand for their athleticism, and you're going to pay up for it. Yep. So there was, PE just was not part of the equation.
Yep, I completely agree with that. That's a really good analogy, by the way. I never thought about that, but it is very similar.
Yeah. So, okay, let me see. I can see what else I can share with you. So let's take a look at some of the other common traits of a stock that is poised to trade higher. We covered a couple of items as it related to being in a demand-driven area of the markets. This is going to be more on your price chart, and one of the items is if the stock has hit a new high in price, and there's a real reason for that. It is because when a stock hits a new high in price, that overhead supply is not there. In other words, there aren't individuals or institutions that have purchased that stock recently. The stock may have gone down and they're waiting to get out. Once it hits a new high, the stock is a bit freer to advance. That's certainly one thing that you can screen for. Also, I talked to you about that RSI and the MACD, that's relative strength indicator, moving average, convergence, divergence. We'll take a look at a couple of other examples. These are both momentum indicators, and you want them to be positive in line with other characteristics that we did review, stocks coming out of bases. And then another key component is that the price of that stock, it does need to be above what I call at least the shorter term moving average. And that's going to be, for my work, at least that 50-day simple moving average. And the reason is this is a moving average that is widely followed by those big chart makers, those institutions, and they are paying attention. So if a stock breaks below that 50, oftentimes that 50-day then becomes resistance. The stock is unable to advance. So that is another key characteristic or common trait among these stocks. So let's take a look. I talked to you about, again, this is Shopify, and I'm also just very quickly pointing out to you again that high volume characteristic as the stock. So this is really encapsulates 3 of those characteristics that we just reviewed. In this case, the stock was hitting a new high on price. We were seeing accumulation. The stock was hitting a new high on volume. And then also we had that RSI, that relative strength indicator, trending upward above that neutral. And then the moving average convergence divergence, MACD, also was in positive territory. So those 3 attractive characteristics that I just spoke to are exhibited here, and we can see the stocks advance. This is a daily price chart, and this red line is a 10-day simple moving average. So the stock is finding support at that upward trending 10-day moving average. So that's a prime example of what I showed you. Here's another look at Ring. I hope this isn't a too cluttered chart, but what I did want to point out to you, this is a daily price chart of Ring. And again, I mentioned in the beginning, these higher, this stock, this is during that 375% advance. Actually, this is not that much of an advance because I'm taking you to the 2019 period, but it did still have a good, nice uptrend here this year. But to the point, I did want to share with you how these stocks will ebb and flow. They will potentially hit a new high, pull back further, advance, and so forth as the markets ebb and flow, and then as news comes out. But for those of you, you will want to have a system in place that will keep you in the stock so you're not shaken out every time it breaks maybe a key moving average. So what I like to do is use the other outlier indicators, in this case the RSI and the MACD. And so what I'm pointing out here quite simply is during this ebb and flow period as the stock advanced, your other outlying indicators were still positive so that you could stay with the stock. To be shaken out and constantly getting back in and out might be frustrating for some investors. Other of you that are swing traders, you might take this time during this sideways downtrending period to look elsewhere. But those of you that with an eye for a longer term trade, use these outlier indicators to keep you in the stock, because indeed, again, this is another gap up on huge volume on earnings. And eventually, overall, the stock was trending higher. So this is the kind of thing with my newsletter, as far as keeping investors in the stock. If it's an egregious break, we will exit. Talked about using moving averages. This is another winning stock from the MEM Edge report. And this is a small cap software stock, APPFolio. They work with they work with real estate management companies. And I'm taking you back here. This was another nice winner for us earlier in the year. And some of those characteristics that got us into the stock are those that we highlighted earlier, as far as the stock advancing out of a base, breaking above its shorter term, simple moving averages, and then you do have that RSI and your MACD both above and in positive territory. Again, we stay with the stock as long as these outlying indicators are positive, despite these nominal pullbacks. But what I did want to point out here is when you use these moving averages, in this case, the green is your 10-day. I have a bluish 21-day simple moving average, and then the red is your 50-day. So taking note that as long as it remains above those moving averages, your uptrend is in place. But what I'm pointing out to you here is this is what I would call a more egregious break. We did remove the stock on this break because it was on very big volume and it was below that 50-day simple moving average. And we can see these shorter term moving averages begin trending downward, but we also had the MACD and the, I have this note it wrong, this is the RSI, and the MACD also went into negative territory. So when we see this type of break, your uptrend very likely is in fact over for the near term, and it's time to move on. Let's see.
I've got another question on, and I think it was on that APPF chart.
Mm-hmm.
You know, when I look, I know you've talked a lot about volume, and I look at this chart, it is a small cap, and it doesn't trade a lot in terms of daily shares on average. I'm just wondering, is there a threshold where a stock needs to trade on average over a certain number of shares before you'd be interested, or does it not matter to you?
It does matter, and it also price-wise, it needs to be at least $5 or $6 before I would even consider it, and on average, 100,000 shares per day.
Okay. And I do want to also mention anybody who came in later into the session, if you have questions for Mary Ellen, and by the way, Mary Ellen, you got a bunch of them, so you're going to get to respond to a lot of people after this is over.
Oh, good.
But if you have questions, it's not a Q&A session. We're really just here to listen to Mary Ellen's style and trading strategy. But if you have specific questions that you'd like to ask her, she said that she will respond by email. So just type those in. The only thing I ask, because I have looked through a few of the questions, is just make sure that you note what stock you're referring to, because Mary Ellen's gone through a number of charts. And if you just say, well, back on the chart when it gapped up, well, she's not going to know which chart you're referring to. So just make sure that if you are sending in questions, that you make it pretty specific as to which chart you're looking at. And I'm sure she'd be happy to get back to you and answer your questions. But go ahead, Mary.
Yeah, absolutely. Okay, yeah. So let's take a look. This is another stock that was on our list. This is CyberArk, CYBR. What I wanted to point out to you here is the fact that the stock, this is the beginning of 2018. And of course, we had that tough period here at the end of 2018. But moving on and looking at the beginning of this year, the stock CYBR did break out of this base, and it did so ahead of their earnings release. I mean, we did have the RSI trending upward as well as the moving average divergence, the MACD. But in this case, going into earnings, I'm not a big fan of trading right before they release, but oftentimes you'll see the analyst revising estimates even up to a month before the release of earnings. And this has been proven to be quite a bullish scenario. In the essence, these analysts, again, they're meeting with management, they're assessing the company. They may have not inside information, but just insights that an individual investor might not have. So in this case, the stock did break out prior to the release of their earnings. Another characteristic, and I'm pointing this out because we did add this stock, was the fact that the industry group that the stock was a part of was beginning to see strength. So this is CyberArk. They are in the cyber security space. When you're doing your work and you're looking to get involved in a stock that you think is going to be one of these big winners, you want to make sure that the group is strong. Group affiliation is very, very important. If you read any of Bill O'Neill's books, it can, from his work, it can be over 70% of attribution given to that group strength. So let's go ahead. I'm going to share with you with CyberArk. It was part of, this is HACK, H-A-C-K, the cybersecurity ETF. Take a look. This had been experienced a downtrend with that 2018 bear market, but take a look at the downtrend reversal so we can see that the cybersecurity software ETF was beginning to reverse, and it did reverse this downtrend. So it is another tool belt item that you'll want, because it with CyberArk kind of gives the confidence that the group is going into an uptrend. The markets have gained or regained interest in this area so that it would easily propel some of the bigger, stronger names within that particular grouping. And then I talked to you about this before, about how these stock, this is APPFolio again, this is a weekly price chart, so I can give you a bit more in the way of history. And again, this is going back to 2016. And I did want to point out that concept that these faster growing stocks will oftentimes have multi legs up, and they will advance out of bases. So this initial base breakout was third quarter of 2016 on earnings. The stock did go on to have a nice, wonderful over 1 year uptrending advance. And then at some point in time, you will experience or see a pullback. That's very, very natural. After about 18 months of an advance, the stock starts to come up against tough quarterly year-over-year comparisons. So they will have these pullbacks, but you will want to have this watch list of these potentially stronger growers. In this case, the stock did have a nice saucer-like pullback, broke out again here on earnings. It doubled out of this breakout before pulling back again. So this is a very common phenomenon, as opposed to oftentimes people think that these stocks will go on endlessly and have multi-year uptrends. They will be have pauses, if you will, with these bases. And in this case, using this weekly chart, you very well could have stayed with it. Again, I will tell you, institutions are going to stay with it as long as these other indicators are positive. But for those of you shorter term, again, you might want to put your money to work elsewhere. I'm going to share with you some of the characteristics. The items I've reviewed with you so far are common, but there are characteristics that are absolutely necessary in every winner. And that first one is a positive chart pattern. I've been sharing with you those saucer type patterns. There are many other different patterns, and I'm just pointing out to you that it can take a bit of time to master them, but very, very well worth it, because you will be rewarded. So when you can put those positive chart patterns together with a number of those other indicators and other characteristics that we have been pointing out to you, you are going to be very well served. Typical base that I've shared with you is about 8 to 12 weeks of consolidation. It can be shorter as well, but that's typical. And again, there are many other chart patterns that you can use. Strong earnings and revenues are a critical component. You are going to need to see both current and sustainable growth. I talked about this, about the product or service is innovative. So they're in an area that is moving along. They create a new innovative way. They're offering a new way of delivering an existing product. So this is, innovation is really going to provide that powerful push, because it's going to provide demand that in turn will provide those earnings that you're going to want to see. And then we talked about the stock being under accumulation. You want to see an increase in volume. That's telling you sentiment may have shifted. And also the increased volume in the stock is telling you that it's being accumulated. So you do want to see that, particularly on those breakouts. Lastly, you want and need to see the broader market healthy. And by that, is it in an uptrend? Of course, before you put your money to work, you want to make sure that you are in a period where the markets are going to support any given uptrend. And then I talked to you about technical indicators. For me, I do use these simple moving averages are a critical component, as well as some of the others, but certainly for the broader markets, these are going to be helpful guideposts for you. I'm trying to think on time. I think I can quickly show this screen to you, but some of the ways that you can screen for these winning stocks, and it's again incorporating those characteristics that I shared with you earlier. I could probably go on endlessly, but
I know how this works because you and I have done this. I mean, you know, you think, even when you remember when we used to start doing the Market Watch, or the show Market Watchers, and you think, okay, how are we going to fill out this whole hour and a half? And then before you know it, the hour and a half's over. You know, so it could go on and on.
You bet.
Yeah, I mean, you definitely have shared a lot of great information with everyone. And here's the other problem, Mary Ellen. The longer you go, the more questions you're going to get. You got a bunch of questions that you're going to get to respond to. No, but it's been a great lesson. I think anyone who maybe hasn't followed your strategy and your style, I think they've probably picked up quite a bit here. Mm-hmm. And that was the whole idea. That's really the concept of these mini events, is that we're going to get all of our speakers in to do one of these events, so you have a little bit of history and a little bit of information behind their strategy and style, so that when they give you, when we talk about the Market Outlook 2020 on Saturday, January 4th, you'll have a little bit more background information on how everyone approaches the market. So I think this has been a tremendous event.
Very good. Great. Thank you to those that attended. I look forward to answering your questions.
Yeah, and I also want to say that Mary Ellen has agreed to a giveaway, and that was one of the things we talked about when you subscribed for our Market Vision 2020 newsletter, is that there were going to be plenty of giveaways, literally totaling thousands of dollars worth of value. Mary Ellen has her newsletter that she has talked about. Normally, that's $97 a month. Mary Ellen? Normal?
It is, yes. Mm-hmm.
All right, $97 a month. She is going to do a giveaway to some lucky participant out there for 2 free months. So that's $194 value. The way you qualify for this is you have to answer the poll question that was in the newsletter today. So, and I don't know, Aaron, if you can step in here for a minute, but if you've got your newsletter article from this morning, simply make sure you go back and click on that poll question and answer. It's very brief. It'll take, 30 seconds. But if you don't have the newsletter, is there some way, is there a link or somewhere they can go, Aaron?
Yeah, absolutely. If you did not receive a copy of this morning's newsletter, you can reach out to us at support@EarningsBeats.com, and we will send you a link so that you can participate in that.
Awesome. So again, that's support@EarningsBeats.com. And we'll make sure that we get that out there to you so that you can be eligible for this drawing. But thank you, Mary Ellen, for not only the presentation, but also the kind offer.
Absolutely. Wonderful. Everybody have a great weekend.
Yep. And I just want to say, you got a lot of questions, so be prepared. We're going to forward those over to you, and you can get back to everybody. But it was a great start to our event leading up to Saturday, January 4th. We certainly hope that all of you will decide to join us. We're going to have just an unbelievable list of speakers, and I mean, market just broke out to an all-time high. I think it's going to be a great time to listen in as to what all of the various technical experts have to say as we go forward. I personally think it's going to be a very good year in 2020, but we'll see. But again, thank you, Mary Ellen. We really appreciate you coming in here and presenting for us today, and we really look forward to you on January 4th, adding to our list of incredible speakers.
Likewise.
All right, and there she goes again. Thank you all for stopping by. Hey, and if you have any comments about the event today, send that to support@EarningsBeats.com. We'd love to hear what you thought of Mary Ellen's presentation and the whole concept of doing these mini-series events leading up to Market Vision 2020. Everybody have a great day, and we'll continually update you through the newsletter as to events that are happening or about to happen. We do have a big reveal on Tuesday for our keynote speaker, somebody many of you probably have heard about. He's a legend, but I'm not telling you any more than that until Tuesday. So have a great weekend, everybody, and good luck in your trading. See ya.